Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Having displayed much activity upon the downside on Friday, the Australian dollar closed in the New York session posting a dragonfly doji. Having found the market respecting the level of 68 figure 35, along with that with the 60-day moving average. The US dollar, however, which measures the greenback strength against a basket of six major parties, came under renewed bearish pressure after refreshing its six-week highs around 104.58, but plummeted and found a cushion around 103.75 where it settled in New York. Looking ahead to this week's economic data, the market will be keeping a very close watch on the recent meeting, being the monetary policy meeting minutes. Along with that, we do get the wage price index updated as well. It is expected to be slightly lighter to the start of this week on trading, as the US markets are closed in observance of President's Day. So with the Dragonfly Doji posted, we do need confirmation, and that is a break above 68.85 would give us further scope towards 69.35 and on towards 69.95, where it was recently contested and failed. However, I'm not abandoning the downside because the technicals are still somewhat weak, with the RSI and the MACD married up to a bearish case and the ADX upholding also a bearish trend. So therefore, failing to get 68.85 would see a challenge of the level around 68 cents, and the break there would give further exposure to the downside around 66.5. We also saw the euro take the challenge to the downside on Friday and posted a hammer after rejecting the level of 106.20. From the rejection, the market as well needs confirmation, and that is a break above the region of 107.15.25 would support this bullish candle and give us the next target of 107.80.90, which was rejected. However, like the Australian dollar, although there is some bullish divergence here, a failure to support the bullish case and taking out 106.20 would expose the region of 105.25, where I've outlined here. The dollar yen still remains somewhat bullish, but did post a gravestone doji after much hesitancy above 135. Still, the ADX is trending bullish, the RSI is overbought, but still supporting the case with the MACD to indicate a further challenge to the upside. So I'm not abandoning the region of 136 as of yet. And if we see that challenge, we may see a little bit of profit taking and a short-term pullback. Sterling took the challenge to the downside but found support around 119.45, and from the rejection still remains vulnerable due to the technicals being somewhat negative. So therefore I do expect to see a revisit to the bottom side of this range, and if we take out and a close under 119.45 will give us the next target seen around 118. Wrapping up with gold and oil, well, the market took the challenge to 1,820 and was rejected, and from there posted a hammer but needs confirmation. A close above 1,845 would be the confirmation to target the region of 1,863 to 66. But the technicals, when it comes to the ADX, is holding to a bearish trend, and the RSI is married up to the MACD to support a bear case, so I won't abandon the downside. And if we take out 1,820, we would expose the region of 1,786 to 89, which currently looks in favour. Finishing up with oil, the market did take a stab at this level of 75.60, but found support there, but not ruling out another challenge to this region, and if breached, gives the next target around 72.5. In light of the technicals, we've seen nearly 5.5 days of bearishness, and still gives some concern that the technicals are quite heavy. So keep an eye on this level of 75.60. As mentioned, if broken, would give further weakness. Well, that wraps it for the start of this week. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoyed the rest of the day.